Welcome to my daily review. Today is Wednesday, February 19th, and today was another kind of a flat day. Now, yesterday it opened up higher, then kind of sold off, and we had a flat close. Today it opened lower and it was bought up. We had another flat close up 15 points or 007. This is 2 days in a row that we've had James Bond days here with the 007 number on Tuesday. After the holiday, we came back, we're up 14 and a half points and 007 on Tuesday. And last Friday, we were up 0.41%. But you could look at these closes, how tight they are. The last is 20,045. Yesterday it was 20,041. And then the last is 56. So that was, excuse me, that was 26. 26 on Friday, 41, and today 56. So kind of tight closes here since last Thursday. We've been up every day since last Wednesday, Thursday, Friday, this week, Tuesday, Wednesday, but just slightly. The Nasdaq is, well, let's go back a little bit here because it had this high December 16th. We had this 7% correction. We got into this really choppy mess the end of December, all of January, the beginning of February, and now we're starting to kind of pull out of it. But we need to get above the 20,118 and then above the 20,204 to make new highs on the Nasdaq, and it just hasn't done that yet. The earnings reports coming out are pretty good. Inflation is a little high, and the market's still getting used to some of the some of the jargon out of the new administration. So there's just a lot to go through. The FOMC minutes came out today, and it was pretty benign. So I think it'll eventually power through this number, but only time will tell. And it's got to do it. Like I say, you always have to allow the index to prove itself. And I keep going to SPY, and I really should be going to the S&P 500, the not the small cap, S&P 500 index.
It's currently partly.
Siri's going to give me the weather. Yeah, the index here, the old high was 128. We passed across that yesterday and made a new high today of 6,144. So the S&P. So what's happening here is that the market rally is broadening out. It's relying less on the technology sector, and there's a lot of sectors that are up just barely. They're not blowing higher. You're not seeing big moves like you do in AppLovin and some of the software names, but there's a lot of other stuff making new highs and doing well. I'm gonna get to that in a minute. But so yeah, indexes at new highs. You can't be bearish. That is totally bullish. All right. I mentioned earnings earlier, and I want to get to some of them from last night. Four reported last night. Pretty good report. Not a good reaction to the report. They'd signed a bunch of new hotels. They signed a bunch of new ski resorts and new professional teams, including the Diamondbacks. I want to say the Dallas Mavericks and college teams like USC. Um, I don't know. I didn't watch enough of the conference to really get into it. I just saw the reaction to the stock last night and I knew it was going to be down. So, man, 17%. Wow. That's quite a haircut. Slicing the 50 with volume, that's adios, muchachos. So, investors don't like what they're hearing from four, obviously. Another one that reported last night, I thought was a good report. And what do I know, man? The investors were selling this thing. Once again, you have a broken chart where the on that whack day, you can't do anything. You come in on a Monday, ANET's been ripping higher for months and months and years, and all of a sudden one day it just falls out on you. You know what was this, like 25% or something? I mean, this is out of the blue. Yeah, 22%. It did rally back through its moving averages, but then, ran out of gas and below the 50s, no good. Reported last night down 6% on a pretty good report. Like I said, I thought it was. You could see the accelerating revenue growth, but hey, you can't argue with Mr. Market. You're going to lose a lot that way. You just got to make the necessary adjustments if you own Arista Networks, Toll Brothers. I mean, just all of the housing stocks are radioactive. That's clearly, you might not know what stocks to buy, but knowing what stocks not to buy always helps. And you could eliminate the housing stocks. This thing has just been clobbered, like all of the housing stocks. I showed you some of the bigger ones yesterday, and I'm not going to do that. Just stay away. They're radioactive. ADI, analog devices, they had a nice gap up, almost 10%. Really massive buyback program for ADI. So this is some semiconductor manufacturer getting back to, kind of a buy area, a little extended now, but nice, 10% move within the base. So it looks good for ADI, APPN. Not a stock that I follow, but I got to acknowledge the move here. Once again, within a base, blast out 16%. So nice reaction to that earnings report. Etsy, a 2020 darling, no longer a darling, down 10%. Adios, muchachos. That looks terrible. FVRR, this is Fiverr International, not a good response, down 8% to their earnings. Report Garmin. Yes, Garmin had a great report. I use Garmin equipment. They have the range finders, the GPS. I know my friend Andy out in Kansas, he uses the fish finders. The fish don't have a chance when Andy's on the lake with his Garmin equipment. They just really don't have a chance. So catch and release is what he does, up nearly 13% with over 300% above average volume. You can see it moved slightly on Tuesday. And then today blasted higher with earnings. So congrats to Garmin. They have a history of, pretty strong, steady, consistent sales growth with their equipment, GPS systems. All right, so congrats to the Garmin longs. On the flip side, Wingstop, not so much, down 13%, looking pretty grim. And then Wix, not a great response to their earnings report. This is not as bad as GoDaddy, but slicing the 50 with volume is not good. And the WWW, it's got to be the shoes. Wolverine Worldwide, just slicing the 200 with volume. And you can throw the shoe stocks in with the housing stocks because these things are being left for dead. But, once people hate them enough, then there'll be buys and they'll come back at some point because people got to buy shoes, right? And they got to buy houses. Well, I guess they don't have to buy houses. They can always rent. All right. I wanted to go through just a couple stocks, some stocks that are up more than 100% in 2025 and stocks that go up, 100%, in a short period of time. Those are the ones that go up 5, 6, 7, 800% in a year. If you're going to go up 800% in a year, you have to start by going up 100%. HIMS has done that. TEM, you know what I'm going to do? TEM looks good. They report next week. Yeah, I'm just going to go to this like a comparison chart, take it back to December of 2024, December 31, 2024, and just put in these stock tickers. OKLO's up 112%. I mentioned HIMS earlier, up 184%. SMCI has been blasting up only 97, doesn't make the club. It was earlier in the day and then sold off. GRAL, GRAL, up nearly 200% in 2025. So you got to pay attention to these moves because, maybe buy them on dips. You can see WRD dipped. Some of these dips are being bought or even sideways action here with, yeah. So NUTX, this is kind of a thinly traded one. 1, 2, 3, 4, 5, 6, 7. Yeah, 7 stocks. There might be more. I just did a quick screen, so there might be more. I have to look again. I might do that this weekend when I have some time. But yeah, stocks that go up like this, a short period of time, tend to trade higher as the year evolves. So keep those tickers in mind. All right, I'm going to move on from that to App11. App11 is making an interesting move here. Obviously, it had a massive breakout last week, and these are not to be ignored. 24% move, and then followed it up the following day with like a 10% move, right? 8% on Friday. Yeah, it gave back a little bit yesterday and today, but it's starting to develop a short stroke pattern here. And that's when a stock goes up 10 or 20% or more. and then only gives back, a couple percent in lighter volume, and it doesn't take out the high of the prior week. So 525.15, look for app to, not take that out and also not go down a bunch, just kind of trade sideways. And you could see the lighter volume in comparison to last week. That is a short stroke pattern. What's the big deal about that, right? It's just another pattern. Usually it leads to higher prices. I want to show you one that I am from earlier. This is Dave, where it broke out and moved 51% in a week. And then in the next week, it didn't make a new high. See, the high of this week was 94.96. And then the following week is 89.98. So it didn't make a new high. It didn't give back anything either. In fact, it went up a little bit because this was 63% of the weekly range. So it went up a little bit, but still definitely a short stroke pattern. What happened from there is the following week was up 14.5%. Thank you very much. We'll take that. And then it got into this consolidation phase and then blasting higher. So we'll take that with AppLovin. The way this thing's going from what was the close this week, 80 to the breakout here, 119. That would be like AppLovin going to 600. So that's why I pay attention. Short stroke patterns pretty rare. You don't see this all the time because a lot of stocks don't go up 20% in a week. And then, when they do, a lot of them give it all back or at least half it back. The key here is it's not giving it back. So if we go to the daily chart, actually two keys. It's not making a higher high this week and it's not giving much back. I think it's just waiting for this five to catch up. And as soon as it hits the five, it's going to bounce probably next week. But AppLovin, definitely a strong stock. Just wanted to point that out because yeah, you don't see a lot of short stroke patterns. All right, just some stocks, some random stocks, some random groups here. This is BKSY, Black Sky Technology, a telecom, services, a cable stock making a new high today, up 6%. Nice move. And this is in the same group as ASTS, which, broke above the downtrend line and has really been strong since. That was last week or the week before. Yeah. Made a nice move. And yeah, what can you say? ASTS. Congrats to the longs. Probably not done the way that thing is rolling. Some other groups, I got to go to the China stocks. GDS, Internet Network Solutions, just acknowledging strength here. The China's Hang Seng has been super strong recently. And these stocks here are flexing as well. Of course, BABA has been super strong and they report tomorrow. Got a little bit of pullback into the print tomorrow morning. And then also FUTU, this is a financial stock doing well also. There's quite a few of them. This one's setting up in a base here, pulling back. So maybe it'll provide an entry here with a little bit of a shakeout. All right. What else do we have? Oh, I got to go to the food stocks. We got to eat, right? Maple Bear. This one's breaking out above the old 50 level. It made that high of $50.01 on November 7th, and it formed this little base, undercut the 50, rallied back above, had this handle here with a pivot point of 47.35, and it's been surfing its 5 EMA like Kelly Slater, and it popped 5.5% today. So congrats to the longs at Maple Bear. And when I talk about that type of industry, I've got to go to DoorDash. DoorDash, yeah, it's surfing its five. Talk about Kelly Slater. This thing is just a thing of beauty. I just like the weekly chart on this one. Just, following its moving averages, had this cup with handle. I don't know. I think I've had this one on our leading stock list for a while. This is one of my favorite weekly charts there. And I think I show it every day. You probably get sick of me talking about DoorDash. I'm not a dasher, by the way. Bros, so since we're talking food, definitely a divergence here in some of the restaurant names. Some of them have been getting hammered. Bros, obviously, if you're thinking about a short stroke pattern here, no, why not? Well, because last week the high was 86.42, and this week the high is 86.88, so it made a new high. So that is a no-no. But you can see the earnings line trending higher, the stock trending higher. Bros is up 3 something% this week on top of last week's gains of 22%. So, Bros is just an easy hold right here. I think it's going to trade just sideways between like 80 and 86 and allow this 5 EMA to catch up. So it's doing nothing wrong, pretty much flat on the day, on a pretty flat day. But at the flip side, a lot of these, I showed you Wing earlier, CAVA, down 10%. One of my buddies holds AXON and CAVA and just had a bad day today. He was not too happy. And when you see, all these funds in here, you got increasing funds, you got the Lord on the side, all these funds here which he relies on, but they sell and before that data is included. So this looks to me like some institutions getting out, but earnings are next week. So they could just be taking profits from, buying way back here. So you don't know. And they could have a nice earnings report and trade to new highs next week. You just don't know. And it could just be precautionary, 10% on that type of volume is not to be ignored though. And slicing the 50 with volume, that's a rough look. All right, I'm going to move on to the insurance names. I hate to do it. Insurance, not, well, I better not. My mom always taught me, and my parents taught me, if you don't have anything nice to say, don't say it. So I'm not going to say anything except for Root has had a strong year. It's trading right near a standard buy point. It broke out and then pulled back to the pivot point. And that's pretty typical of stocks that rally straight off the lows. There's going to be some profit taking. So it pulls back to a pivot, might even come back to the 21 here, but looks pretty good. Gallagher is another one. AJG. This one has a cup-shaped pattern, not forming a handle, just trending higher with its 5 EMA. And also, I mentioned Bros earlier, and this is Bro, Brown and Brown, setting up nice, trading tight within a cup-shaped pattern. I kind of like this one. I mean, if you're going to buy an insurance stock, I don't like chasing performance. I don't like buying weakness. This one's showing some strength, trading tight, so I like this one. Anyway. I'm going to move on to just some heat stocks, some stocks showing some heat. And I mentioned earlier about how the market is, kind of spreading out, not relying just on AI or technology, data centers or whatever. It's spreading out. So I'm going to show you, stocks making new highs, and I just call them heat stocks from different groups. And this is a machinery farm group, John Deere. I mentioned it yesterday how it was making new highs, and it did it again today. Went through that 500 level like poop through a goose, up 1.5% today. So congrats to those John Deere longs. And then in the biotech, speculative biotech space, this one actually has earnings, but cup-shaped pattern, breakout here, 13%. This is why we monitor these, gappers. A nice breakout of 13%. We'll take that all day long. I am going to create a video this weekend of the gappers because the earnings season is starting to wind down. We're getting fewer and fewer gappers, but still monitoring them. And I have like, I don't know, 30. I'm going to try to narrow it down to like 12 or 15 that I like the most. But anyway, of course, that looks fine. Since I'm in the drug area. Gilead is doing well also. This one broke out, not a real gapper because it didn't have the 10% move, but 7.5% with volume, and now surfing that 5 EMA. So that one looks good. The oil and gas stocks, that's a place that's been really hit and miss. EQT made a new high today, close, in the bottom 10% of its daily range, which is not what you want to see. But still, making new highs, you always like new highs when you own the stock, right? SLAB, Silicon Laboratories, making new highs. This is a semiconductor fabless in the AMD, Qualcomm space, NVIDIA, ARM. So this one looks pretty good. Rambus, Marvell. There's a lot of semiconductors, and you can see how long this thing's been in a base for 50 weeks, so darn near a year of consolidation. And there's no truth to the bigger the base, the higher in space. We just need some sort of a base, and that's definitely a base that it might look to break out of. We just need a base. More base, please. HWM, aerospace defense stock making new highs. This one's in heat as well on a total heater on the longboard, surfing its 5 EMA. So that one looks very good. Not a bad time to trim, take some profits. And this is Gorilla Technology. It had this high of 25, I don't know, around the first of the year. Formed this little base. Like I say, all we need is a little base. Broke out here 16% and rallied again 25%. Pulled back 2 days to the five and then got support, bounced quietly 14% today. Shh, don't say anything. So yeah, there's just a lot of stocks, even the airlines, Alaska Group making a new high today, surfing its five. So the rally is spreading out to other areas, and you just can't park it in, the software names, the AI names, because there's going to be a rotation, and that's why I believe the shotgun approach is best in this type of a market instead of just focusing all your eggs in one basket, because when the rotation comes and you're going to get slaughtered and it's not going to feel very good. And we want you to feel good. All right. And the antithesis of these heat stocks, we got some stocks that were just absolutely slaughtered today. Now, Axon made a new high yesterday. I don't know what happened. It got it's got a blue dot for relative strength. It did. It made a new high on Tuesday at 715.99. Today it was downgraded by some boutique service, and I don't know, it just fell out 16%. That is not a good look. Palantir sold off as well on the news that there might be some budget cuts to the Pentagon, but you really, the CEO was selling stock as well. And also, this is why I say you can't chase performance. If you're buying this stuff up here, well, yeah, you deserve to get hammered. You're trying to be greedy, or you just don't chase performance because this is likely to happen. So anyway, don't chase that stuff. Sometimes you just got to say, hey, I missed this move here. I missed the buy at 84 and say la vie, move on to the next. So you missed that. Gap tire and adios. It's one of my gapper stocks that I'm going to include this weekend. All right, I got to move on. We have some other ones. I showed you Wing earlier getting slaughtered. Yeah, it's tricky out there. CE, Celanese, man, gap lower, 21% move lower. So it's dangerous out there. You got to be selective. And yeah, geez, this is iOS. This is a chemical stock, man, down 7%, making new lows. Man, I feel bad when I look at these charts. TX, because some of these, people are holding these. They got their retirement portfolios, stuck in these stocks that are going nowhere but down. And then Noble is another one of the oil and gas drillers. Drilling is not going to be a thing. We have, way too much oil. We need more refining. But anyway, I wouldn't own that stock. If I wanted to own an oil and gas stock, it would be in the natural gas space like LNG. These guys are reporting tomorrow morning. I'm getting ahead of myself. Or EQT, which I keep coming back to, or AR, and natural gas. Yeah, all right. I'm going to move on. Let's move on. Thank you for watching at mcstockcharts.com. We never give up. In honor of the great Steve Jobs, I've got to go to tonight's earnings report. Last night we had four, which had a pretty good report and then sold off. Now TOST had well, I don't know how do I say it? Well, yeah, I think they had accelerating revenues. I think it was 29. So 27, what is this? 26, 29. It looked like a pretty decent report. Um, we'll see what happens tomorrow. I mean, 40, it went up to like 44, it was up like 10%, and then it was down like 5%. So it's been moving around in after hours. We'll see what happens if it can get off that 40. It sold off today with the news from four CVNAs, buy the rumor, sell the news type of thing. Good report. It's been up a lot this year, down 11% after hours. Having a hard time finding stocks that are winners this week. Last night we had a bunch of losers. ENVX, down 10%. How about the Cheesecake Factory with the long menu? Yeah, okay, 17 cents. Not doing much. EXAS, Exact Sciences. No, man. We're in a selling mood, aren't we? VALE reported, okay, barely nothing. KVYO, this is a software play, up 5%. Okay, can handle that. Bouncing off the 21 tomorrow. So anyway, oh, and then tomorrow morning we're going to be all over Walmart. This is big for retail. You know, they sell food, they sell a lot of things, a one-stop shop. This is going to impact retail and food stocks tomorrow for sure. Walmart is the big kahuna. Then I mentioned earlier, Baba reports in the morning. Unity Software reports in the morning, and so does Wayfair. They got the dumbest advertisements on television. One of the dumbest that needs some help. I can help them. All right. Kamiko reports in the morning. I don't know. The miners have been sideways at best. Baxter reports in the morning. Medical product stock. You can see this one's in a world of hurt. Shake Shack reports in the morning. I'm hoping for good things. You can see this one's really, made this nice move up to 139 and it's been consolidating within a base and made that low. What is that, about 105? Ooh, pretty rough there. Consolidation for Shake Shack. And the last one is LNG. That one might impact KAVA as well. LNG, yeah, this one reports in the morning as well. So we'll see what they have to say. Anyway, thank you for watching at mcstockcharts.com. We never give up.